where blockchain could maybe have a really, really good role to play here for how we could create a shared and trusted network between the intermediaries and guarantee then the transfer and the issuance of those shares, as well as manage the payment of those shares. So that's one very interesting project we're working on, and we're collaborating together with 8 banks up here in Sweden for the moment.
Okay.
Another case is on the collateral side, to see how could we more efficiently move collaterals.
And this is that's post-trade.
Exactly. It's also post-trade. So I mean, collaterals is what you use to pledge to the clearinghouse as security.
Right.
That you have some exposure, some risk, and then the clearinghouse will ask you for additional margin to cover for your positions.
Right.
So that is also a big hurdle today. It takes a long time to move collaterals. It's a costly process. It's not so efficient. So once again, that rings a bell for us that maybe this could be of interest for being deployed on a much more efficient network.
Interesting. So I guess particularly with these 2 projects, and probably generally, how do regulators see blockchain? Do they? I mean, they're all about transparency and the integrity of the market, something that we definitely believe in too at Nasdaq. Would you say blockchain then would be one of those technologies that it's a new emerging one, but one that they're quite happy to support in whatever way they can? How's the regulators been on this?
I think it started with them learning what is the technology.
Yep.
They were a bit, resistant to some level, but before they understood that, this could actually look really, really interesting for us. It could improve the transparency and the safeness of the market. So I think now most regulators, if not all, are very, very proactive now and think about how could we support innovation that are using the blockchain technology. And I think in many cases we see that laws and rules and regulations doesn't necessarily need to be changed because they don't specifically talk about which technology to be used. Yep. But in other cases you might need to update the laws and regulations to support new types of business models that this technology now evolves.
I see. So, okay, I guess just bring it back to, I guess while we're here at TOF here in Stockholm, the Nasdaq Financial Framework, I know that has some type of, is it blockchain capability? Is it enabled? Like, how does blockchain fit within the Nasdaq Financial Framework? Yeah. If I was an exchange out there in the world, and I say, you know what, I would like to potentially play with blockchain a little bit, and I want to work with Nasdaq. Yeah. Is that the way you do it? Like, very much.
We encourage for collaboration and innovation together here with our clients and markets. So into the Nasdaq Financial Framework, blockchain is now one of the microservices, one of the native components. So we made sure that any applications that are using the Nasdaq Financial Framework layer can also read or write information to a blockchain.
Okay.
So by that we could already now say that we more or less have all applications can easily be enabled to start to communicate with the blockchain network as well.
Okay.
So I made a couple of proof of that already 2 years ago at the latest TOF that we ran 2 years ago, where we did show how you could easily connect our collateral management system to a blockchain to more easily move collaterals in a shared network.
So with Bitcoin and blockchain, people get them like, they talk about them interchangeably, and I know they're not. But like, why is there this confusion? Why do they link them?
Yeah, I think because Bitcoin is using the technology of blockchain, and Bitcoin became really, really famous a couple of years ago when the value of the Bitcoins increased dramatically and it was heavily traded on the cryptocurrency side. So that's, I think, why it's in between. So I think it's very important to make that distinction. Bitcoin is one deployment of the technology blockchain. And Bitcoin is very public. Anyone is able to join and view the transactions. Anyone is able to participate in the consensus, approving the transactions. Right. While we focus much more on the blockchain core technology and see how we could apply that for our financial markets. Right. And there I think it's also important to make that we talk primarily about permissioned networks, permissioned blockchains, where you maybe control the participations in the network, and by that we don't need to power the blockchain network with 8 nuclear power stations like the Bitcoin is famous for.
Sure.
And the transaction speed is so much quicker when we move on to the permission networks, because we can have much more simpler process for reaching consensus and approving the transactions.
I see.
So I think that's 2 big distinctions you need to make. Bitcoin is one way to apply this technology, and they made it their way. And there's so many other ways we can deploy this.
So would you say that like Bitcoin would be, I mean, it's a cryptocurrency, is that?
Bitcoin is a cryptocurrency.
Right,
clearly,
exactly.
Yes.
So I guess, could someone trade Bitcoin? It doesn't have to be on blockchain, right? Or is it's always going to be tied to blockchain?
So Bitcoin is always tied to the blockchain protocol. Yeah,
gotcha.
Exactly. So that's why they're using this peer-to-peer mechanism. There is no central operator in the Bitcoin world, I also say that the problem with Bitcoin is that if something goes wrong, you don't have anyone to call. There's no one to sue or get your money back. Okay. So if they get your private key, I mean, they can literally steal all your Bitcoins, and there is no way for you to get them back. So that wouldn't function in the financial markets. So that's why we move into private permissioned hybrid ledgers to see how could we make sure to establish also a very good proven governance model for these networks.
Okay, well thank you so much for talking to us today.
Thank you very much.
Yeah,